Welcome to the part 2 of my lecture on tax remedies. So, as promised, the deliverables are the computations as well as the government tax remedies. But before we go through that, I need to summarize what happened on the lecture on part 1. So, I told you that the tax audit will always start with the receipt of the letter of authority. And after that, you're going to submit documents so that the BIR can audit, and then you let them investigate or examine while waiting for the notice of informal conference. This informal conference invites the taxpayer so that the BIR will be able to present their audit findings, as well as this is the first um, chance that the taxpayer will be able to defend himself or herself against those findings. So the notice of informal conference, after 30 days, you should meet with the BIR. Next is the issuance of the BIR with the preliminary assessment notice. This notice contains the audit findings as well as the legal basis on which the assessment of the revenue officer is based. So the remedy of the taxpayer is to reply after 15 days or within 15 days after receiving the preliminary assessment notice to contest the findings if ever. And after that, the BIR will issue the final assessment notice or the final demand letter. So generally, preliminary assessment notice first before the BIR will issue final assessment notice. That's the due process. That's the way, or that's the order. However, there are times that the preliminary assessment notice is not necessary already. Diretso na yung BIR mag-i-issue ng final assessment notice. And what are these cases? PAN is not required for the following cases. The first one, the difference in the eyes of the BIR versus the taxpayer. If the difference is because of mathematical error, then PAN is not already required, diretso na PAN. Second, if the difference of the taxes paid versus the taxes assessed by the BIR is the non-payment of excise taxes of excisable articles, then there's no need to issue preliminary assessment notice. So a little bit of this one. There are some articles that are subject to excise taxes, especially luxury items like beauty products and cars, for example. If you have not paid excise taxes for those, then the BIR has discovered that one, then they're not going to issue PAN, they're going to issue kaagad the final assessment notice. Number 3, if the difference between the opinion of the taxpayer as well as the BIR is because of the deficiency on the taxes withheld by the taxpayer and what was actually remitted, then diretso na final assessment notice. What do I mean? Companies are also considered as withholding agents of the government. Let's say, for example, if a company has employees and he gives or it gives salaries to employees, they're not going to give the 100% salaries. Instead, they're going to take a portion of it and withhold it. And they're going to remit it to the BIR. Let's say, for example, there is 100,000 withholding tax on compensation withheld by the company. And what was remitted is only 50,000. So there is a difference. So if the government discovered that, then they're going to issue directly final assessment notice. Number 4, if the difference is because of the articles that are locally purchased or imported by an exempt person, such as but not limited to vehicles, capital equipment, machineries, and spare parts, has been sold, traded, or transferred to non-exempt person. So if the government discovered that you are doing this, and the difference is because of this one, then diretso na PAN. What does this mean? This means that an exempt person purchases something for another person, a non-exempt person, Basically, the non-exempt person is just using the exempt person in order to evade taxes. Number 5. When a taxpayer who opted to claim a refund or tax credit of excess creditable withholding tax for a taxable period was determined to have carried over and automatically applied the same amount claimed against the estimated tax liabilities for the taxable quarter or quarters of the succeeding taxable year. What does this mean? Let's say you have an overpayment of tax, so you have two options. The first one is claim a refund, and the second one is to use it as a tax credit. What does it mean if you're going to use it as a tax credit? That means if you have overpaid 100,000, you can use that as part of the payment of your next tax liability. So let's say, for example, you have overpayment of 100,000, and in the future you are about to pay 1 million. You're not going to pay the full 1 million already if you're going to use the 100,000 as tax credit. You are only going to pay 900,000. So what this number 5 means is that when you opted to claim for a refund, do not use that amount to deduct your tax liability in the future. Otherwise, you will have a double benefit because of that one item. That is not allowed. Now, if the government or the BIR has discovered that you did that, then they're going to issue final assessment notice directly without issuance of preliminary assessment notice. After the issuance of FAN, and you still don't agree with the findings on the FAN, you can file a protest to the CIR within 30 days after the receipt of FAN. And if it has been denied, then you go to number 6. You can file the appeal to the Court of Tax Appeals within 30 days after the denial of the protest. And then you go to number 7. If the appeal did not succeed, you're going to file motion for reconsideration in the CTA within 15 days after the denial of the appeal. And if it doesn't work, you go to number 8, which is you go to the CTA in bank and appeal within 15 days after the denial of the motion for reconsideration in the CTA. But if you lost again, then you go to number 9, which is you need to file the motion for reconsideration to the CTA in bank again within 15 days after the denial of the appeal. And if it doesn't work, then you go to the highest court, the Supreme Court. You're going to file an appeal in the Supreme Court within 15 days after the denial of the MR, and then you file for a motion for reconsideration in the same court if the appeal was denied. And if it is not successful again, you go file an appeal to the Supreme Court in bank within 15 days after the denial for the motion for reconsideration. And the last taxpayer remedy is filing of motion for reconsideration to the Supreme Court in bank within 15 days after the denial of the appeal. And the taxpayer can no longer have any remedy after this one. So that's it for the summary. So we are now on the computation part. So in order to do that, let's go back to what is our illustration in the past video. In the past video, it is said that you have filed an annual income tax return for 2019 on April 1, 2020. So it's not yet the deadline because the deadline is April 15, 2020. And you paid in total 500,000 income taxes for your taxable income in the year ended December 31, 2019. And in April 1, 2021, 1 year later after you filed your annual income tax return, the BIR wants to assess the tax return that you have filed a year ago. So let's assume further that they have conducted already their investigation or their assessment, and they have concluded it with a final assessment notice on August 15, 2021. And it indicated that the total income tax that should have been paid is 1 million. So there is a deficiency of 500,000. And then assume further that you contested the assessment using the courts, but you lost. And it's already now December 15, 2021. The question is, how much will you pay in this date? So to compute, let's compute first before the train law. Before the train law, that means before 2018. So the assessed income tax of the buyer is 1 million on August 15, 2021. You have paid for only 500,000. So you have a deficiency of 500,000. So that deficiency will be paid plus penalties. So there are two types of penalties, and one of it is a surcharge. The surcharge can be 25% based on the deficiency or 50% based on the deficiency or the unpaid taxes. The question is, when do we charge surcharge of 25% or 50%? Let's start first with the 25%. When do we pay 25% surcharge? First, if you fail to file a return and pay tax due on time. So we are partially guilty in here because although we have filed a return before the deadline and we have paid a tax due on time, however, it's not complete. The second is you have filed a return with an internal revenue officer other than those with whom the return should be filed unless authorized by the commissioner. So, example, if you are a business, you have a business here in Surigao City, you should have filed your returns with the RDO or Revenue District Officer here in Surigao. But if you opted to file the return in Butuan City, then you are already guilty with the second. So you'll be charged with 25% surcharge unless you're authorized by the commissioner to do so. Next, failure to pay the deficiency tax within the time prescribed for its payment in the notice of assessment or final assessment notice. So we are guilty with this one because the final assessment notice has been given August 15, 2021, yet we did not pay on this date. Instead, we contested the assessment in the courts. And the last is failure to pay full or part of the tax shown in any return or the full amount of tax due for which no return is required. So that's self-explanatory. So you'll be charged with 25% surcharge for this following. So next question, when do we pay 50% surcharge? We pay 50% surcharge if there is willful neglect on filing the return on time. On the 25% surcharge, there is no willful neglect. So, how do we establish willful neglect? Let's say, for example, your income tax returns deadline is April 15 and you did not file on April 15. You filed April 20. So, you are already overdue, long overdue. And you have filed that after you have received a written notice from the BIR. So there is a presumption that there is willful neglect. So if you filed after the deadline and after the written notice from the BIR, then there is willful neglect. However, if one of them is absent, there is no willful neglect. Like for example, if you have filed April 20, however, you have filed voluntarily without the written notice from the BIR, then you will not pay 50% surcharge, only 25% surcharge. And another is, you're gonna pay 50% surcharge if ever you have filed a fraudulent return. So, how do we say that you have filed a fraudulent return? So, there is a presumption of fraudulent return if ever you are overstating your expenses by 30% in order to diminish or lessen your taxable income, or by understating your sales by 30%. So, that's it. You're gonna pay 50% surcharge if there is willful neglect on filing the return and you have filed a fraudulent return. So, continuing the illustration, let's say we have not filed a fraudulent return and we did not um, neglect willfully the filing of the return. So, we are gonna be charged 125,000, which is 25% surcharge. How did we get this? 500,000 times 25%. Next type of penalty. Before the train law, there is what we call as deficiency interest of 20% per annum. So, how to compute the deficiency interest? You get the deficiency, the 500,000, you multiply it with the percentage, the 20%, and the time. The time here is 16 over 12. That means 16 months over 12 months. So, how did we get the 16 months? So, again, the deadline is April 15, 2020. The final assessment notice arrived at August 15, 2021. So, from April 15, 2020 to August 15, 2021, that's 16 months. So that's why we use 16 here. So it's not from April 15, 2020 to December 15, 2021. It's from April 15, 2020 to August 15, 2021. The date of the final assessment notice. So the amount is 133,333. Now, if you're a student and there are some multiple choices and there are problems, we cannot use number of months because it is strict. You're going to base not on the number of months, but you are going to base it exactly on the number of days. So, instead of using 16 months, you're gonna compute. So, from April 15, 2020, so there are 15 days left because April has 30 days. And then, so if you're going to shortcut from April 1, 2021 to April 15, 2020 to August 15, 2021, that's 487 days. So 487 over 365 yung gagamitin mo instead of 16 over 12. So you need to know how many days exactly are in a month. Like for example, January has 31 days, February has, so you need to know that all. So the total that we're going to pay if we have paid on August 15, 2021 is 758,333. That is when we have paid in the final assessment notice issuance date. But we didn't because we contested the assessment using the courts. So, what will happen next? You're going to add again a deficiency interest of 20%. That's from August to December. So, from August to December, that's 4 months. So, 500,000 times 0.20 times 4 over 12. But then again, if you're a student, you're not going to use the number of months. Strictly, you're going to use the number of exact days. So, from August 15, 2021 to December 15, 2021, you have 122 days. So 500,000 times 0.20 times 122 over 365. So for simplicity of discussion, we use the number of months. So you're going to pay again another 33,333. Aside from that, you are going to pay another type of interest, which is the delinquency interest, 20% per annum pa rin. So how do we compute the delinquency interest? We're not going to use the deficiency of 500,000 already. We're going to use the 758,333, the supposed to be amount that you should have paid on the date the final assessment notice was issued. So 758,333 times 20% times 4 over 12 is 5556, or use times 122 over 365. So the total that you're going to pay on 12/15/2021 is 842,222. So let's compute under train law, because I've already discussed before the train law. So under the train law, the assessed income will still be 1 million. The amount of taxes paid, let's assume that it's still the same, 500,000, and the deficiency is still 500,000. How about surcharges? They are still the same. They are not the same with the deficiency interest, because in the past, before 2018, the deficiency interest is charged at 20% per annum. Under the train law, it's only 12%. So when computing for the deficiency interest, you have 500,000 times 0.12 times 16 over 12. So it's cheaper. So I have not mentioned in the past that you can still make this 80,000 go lower by paying before the final demand letter. Let's say, for example, in our example, illustrative example, if you have paid on the date the preliminary assessment notice has been given, then the amount of time that has passed will become lower. So the amount here will become lower. The 80,000 will become lower if you have not waited for the final assessment notice. Instead, you paid earlier. So if we paid on August 15, 2021, we're just going to pay 705,000. But we didn't. We contested the results. So we're gonna add a delinquency interest. The deficiency interest is eliminated already in here. We're just going to pay the delinquency interest of 12% based on the 705,000 times 0.12 times 4 over 12. So the amount to be added is 28,200. So we're gonna pay only 733,200 compared to before the train law of 842,222. Because under the train law, the interest rate is not only reduced to 12%, but the deficiency interest and the delinquency interest shall not be applied simultaneously. So that's it. Let's go first with the prescriptive period for collection. Why do the government employ tax remedies to enforce collection? Because even if they are collecting, there is still a deadline. That is what do we call as prescriptive period for collection. So what are these? So for example, you have a return, it was not assessed, and the return filed is not fraudulent. They can only collect 3 years from the actual filing of such return or the deadline of filing, whichever comes later. So if, for example, in our illustrative problem, there is no tax audit that happened, and then we filed on April 1, 2020. So the deadline is April 15, 2020. They can only collect 3 years after April 15, 2020. But if our return filed is fraudulent or we did not submit any return, then they can collect 10 years from the discovery of the fraud, or 10 years from the discovery that no return was filed. But this did not happen in our illustration. What happened in our illustration is that there is a tax audit or tax assessment. So that falls under with prior assessment. So they can only collect from us 5 years from the issuance of fund. So in our problem a little while ago, the fund was issued on August 15. So from that, you count 5 years. That's their deadline. So that's the prescriptive period for collection. So we've talked about prescriptive period for assessment and prescriptive period for collection already. Those prescriptive period of assessment and collection can be suspended in these following cases. Number 1, no property of the taxpayer can be located. So meaning, if we are going to follow our illustration, we are with prior assessment and 5 years from their issuance of fund, they are going to collect. However, the 5 years will stop, the counting of the 5 years will stop if they cannot locate any property of ours as taxpayer, or if the taxpayer is out of the country, or the taxpayer cannot be located in the address given in the return, or the taxpayer's request for reinvestigation was granted. Let's say, for example, we protested, there is a request for reinvestigation. So if that was granted by the CIR, then the counting for the prescriptive period will stop. So there is a very important note that you need to remember. The suspension shall be the duration of the situations mentioned above. So if the taxpayer is out of the country for 2 years, then it's suspended for 2 years, plus 60 days thereafter. So it's now time to tackle government tax remedies. What can government do in order to enforce collection of taxes? So one action that it can do is restraint of personal property of the taxpayer. What is this? It's the seizure by the government of personal property, whether tangible or intangible, to enforce the payment of taxes. So there are different types of restraint. We have the actual restraint, in which the personal property is physically taken by the government and is offered for sale at a public auction. So they're gonna take your personal property if you're the taxpayer, delinquent taxpayer, and they're going to offer that in a public auction. And if it will be sold, the proceeds will be applied first to the taxes plus penalties, and if there are still excesses, this amount will be returned to the taxpayer. That's actual restraint. The second one is garnishment. That is the restraint of bank accounts. So freezing of bank accounts and then getting an amount in there that will represent taxes plus penalties, and then if there are excesses, it will be given back to the taxpayer. And we have the constructive restraint. In here, there is no physical taking of the personal property. It is only the person in possession of the personal property of a taxpayer, not necessarily the owner, basta yung person in possession of the personal property, will be made to sign a receipt undertaking that he will preserve the property and will not dispose of the property without the express authority of the BIR. And it will be availed by the government under the following cases. The first, in order to protect the interest of the government, when the taxpayer tries to remove his property, then constructive distraint can be an option of the government. Second, if the taxpayer performs any act tending to obstruct the proceeding for the collection of tax due from him. Third, he intends to leave the Philippines. And 4, he intends to retire from any business subject to tax. So if this 4 or any of these 4 is present, constructive distraint can be an option to the government. Important notes to remember. The person authorized to start or to commence the distraint proceedings is the Commissioner of Internal Revenue if the amount involved is more than 1 million. Otherwise, it's only the Revenue District Officer. Number 2, if the sale is not yet consummated and that the taxpayer has been able to pay the taxes, interest, and other charges, then the property can be restored to the taxpayer. So that's it for the distraint of personal property of the taxpayer. Another option of the government in order to collect taxes is the levy of real property of the taxpayer. Levy is for real property, distraint is for personal property. So this is the seizure by the government of real properties and interest in or rights to such properties in order to enforce the payment of taxes. We have here the concept of right of redemption, which states, for a period of 1 year from the date of sale, the property may be redeemed by the taxpayer by paying the purchase price plus 15% per annum. If the taxpayer fails to redeem the property within 1 year, a final deed of sale is executed in favor of the buyer or the highest bidder. So, let's expound this further. Let's say, for example, you're a taxpayer and you have a deficiency tax plus penalties. However, you cannot pay the BIR. So, the BIR seized your building. Your building has many people who rents in it, for example. So, the government seized your building, and after seizing it, it is made available for public auction. So, let's say, for example, I am the highest bidder. So, I'm already the new owner of your building. However, even if I'm already the new owner of the building, you have a deadline of 1 year to get your building back by paying the purchase price plus 15% interest per annum. So that's it. Next is the highest bidder or the buyer for the period of that 1 year shall not be deprived of the possession of the said property and shall be entitled to rents and other income thereof until the expiration of the time allowed for its redemption. Let's go back to my illustration. So, I'm the highest bidder. You still have 1 year. You can redeem the property within 1 year. However, within that year, as the highest bidder and the new owner, you cannot deprive me of the possession of the said property. And you cannot deprive me of the rents and other income. Because basically, I'm the new owner. You have just been given the right to redeem it after 1 year. So that's levy of real property of the taxpayer. Another option of the government is to use the courts. The government can file a civil case or a criminal case for collection and punishment of the taxpayer. Or the government has the option to receive installment payments. Our illustration in the past states that we have a total of 733,200 amount of payable to the BIR under the train law, and you cannot pay it in full now, so you can pay it installment payments if the BIR will allow. So for example, the 733,200 will be paid in 2 monthly installments starting on 1/15/2021, which is 1 month from 12/15. So on 1/15/2021, we're gonna pay the first installment. The 733,200 divided by 2 is 366,600, but we will be liable for interest. The interest is computed based on 733,200 times 0.12 times 1/12. So the total interest that we're going to pay is 7,332. So you add them. So you're gonna pay total of 373,932 on the said date. 1 month later, you're going to pay for the final installment, 366,600, and the interest, which is lower, is because it's not based on the 733,200 already. It's based on the balance of 366,600 after payment on 1/15/2021. So 366,600 times 0.12 times 1/12 is 3,666, and we have 370,266 to be paid on 2/15/2022. Another option of the government is compromise. The grounds in which should be present in order for compromise to be an option. The first one is the financial position of the taxpayer demonstrates a clear inability to pay the assessed tax. So if the taxpayer cannot pay because the financial position of the taxpayer is suffering, then the minimum compromise rate for the financial incapacity is 10%. So that's a very big discount. But on other grounds of compromise, the minimum compromise rate is 40%. Another ground is there is a reasonable doubt as to the validity of the claim against the taxpayer exists. For example, we are the BIR, you have the taxpayer, and you are already fighting in the Court of Tax Appeals. And you have realized as the BIR that there is a doubt that you will win. So what will happen? The BIR will tend to talk with the taxpayer and agree on a compromise. So that's compromise. However, there are very important notes that you need to remember when we talk about compromise. The first one, before the compromise will succeed, sometimes the approval of the evaluation board, which is composed of the Commissioner of Internal Revenue and 4 deputy commissioners, is required. So one situation is if the basic tax exceeds 1 million. The basic tax is the basis for the compromise. 10% based on the basic tax, or 40% based on the basic tax. So if the basic tax exceeds 1 million, then evaluation board's approval is necessary. Another is if the settlement offered by the taxpayer is lesser than the prescribed minimum rates. So again, for financial incapacity, the minimum is 10%. For other reasons, it's 40%, but the taxpayer said it can only pay up to 30% of the basic tax, then the evaluation board should approve it. So that's one of the actions that could be taken by the government, the compromise. And we have the note 2. When it comes to all criminal violations, lahat yan can be compromised, except for those that are already filed in the court or those involving fraud. Because if the tax case is involving fraud, there will be no compromise in there. Next option of the government is the abatement or cancellation of tax liability. What are the grounds? The tax or any portion thereof appears to be unjustly or excessively assessed, or the administration and collection costs involved do not justify the collection of the amount due. So the first one, for example, the estate or ang kayamanan is only 100,000 and then the estate tax is 200,000. So that is unjust and excessive. So the BIR can abate or cancel the tax liability. Or if the tax that can be collected by the BIR is very low, very small, compared to the administration and collection costs, then it would be better that the BIR will abate or cancel the tax liability. Let's have the bonus topic. What if the tax was erroneously or illegally collected by the BIR? So meaning you have an overpayment. So what will you do? Ask for a refund or a tax credit. The question is how? Number one, you need to file a written claim for refund or tax credit with the Commissioner of Internal Revenue within 2 years from the date of payment of the tax or penalty. Second, if the claim is denied, file a petition for refund with the Court of Tax Appeals within 30 days after the denial of the Commissioner of Internal Revenue for refund, but still, tax credit with CIR within 2 years from the date of payment of the tax or penalty. This means, after the claim is denied, so you can file sa CTA within 30 days after the denial, but still you need to make sure that pasok pa rin sa 2 years from the date of payment of the tax or penalty ang appeal. Next, how to determine the date of payment? Okay, so the date of payment is the actual payment date, but sometimes there are a lot that will be confused, especially when we talk about companies. Companies are usually filing and paying quarterly. So, January to March, the first quarter, March to July, March to June, the second quarter, July, August, September, the third quarter, and they're not going to pay for the fourth quarter. They are going to pay for the annual already on April 15 on the next year. So, if there is overpayment or illegal collection on the second quarter, sometimes it is interpreted as the period of 2 years will count on that second quarter, but it's not. The counting of the 2 years will start on the filing of the annual income tax return, not on the quarterly. When do the 2 years prescriptive period starts to run? It's at the date of the actual payment, or if the overpayment is made on installments, the 2 years starts at the date of the last installment. So that's it for our tax remedies. So there are 3 things that we have focused on video number 1 and video number 2. That is, what are the taxpayers' remedies? What are the government's tax remedies? And of course, how to compute for the tax due of the taxpayer. So that's it. It's the end of our presentation. Please feel free to visit my channel, click subscribe, play it as many times as you want in order to master the topic.